Welcome. Today we're covering building your first portfolio. Let's get started. Start with a solid foundation. Don't just buy random stocks, build with purpose. A well-structured portfolio balances growth engines with shock absorbers. We'll walk through how to lay that foundation today. Before buying anything, look inward. Your ability to stomach market swings and your timeline for needing cash shape everything. A young freelancer and a nearing retirement teacher need totally different setups. Try the core satellite approach. Use broad index funds as your core, providing reliable market returns. Then, use individual stocks as satellites for extra growth. This keeps you diversified while still letting you pick winners. For your stock slice, avoid putting all eggs in one basket. Blend growth and value, giant corporations and smaller firms, and look beyond your home borders. Never let a single company dominate your net worth. Bonds are your shock absorbers. When stock markets tumble, high-quality bonds usually hold steady or rise. Stick to short-term or government bonds for true safety, and be wary of high-yield junk bonds that act like stocks. Now, put the plan into motion. Set up automatic contributions to buy consistently regardless of market hype. Reinvest your dividends and keep fees low to let compounding do the heavy lifting. A portfolio isn't set and forget. Over time, winners grow and skew your risk. Set a calendar reminder to rebalance, trimming the overgrown assets and adding to the lagging ones. This enforces a disciplined buy low, sell high cycle.